What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So my dividend portfolio right now with my M1 Finance dividend portfolio, I'm at $110,000. And I did tell you that I would buy a new REIT. I kind of gave you guys hints on the one that I would be buying. I gave hints with previous videos. But I'm going to go in depth as to why I bought them. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out this REIT right now. I'm on Yahoo Finance right now. I guess Google's having some issues, and I apologize. There's a processing error yesterday, and I wanted to post this video, and it's Broadstone Net Lease. BNL is a symbol. It's sitting at 1569. Now it took a huge nosedive recently. At one point it was 2633, and it's almost at the price of Arbor Realty Trust. And I've been loading up on Arbor Realty Trust over the years, and at 1569, this is definitely something that I capitalized on, and I threw $350 in on M1 Finance. So let's check them out. So going on their website, they're a diversified strategy built for defensive growth. BNL is an established net lease REIT with a proven diversified strategy focused on the acquisition of mission-critical single-tenant commercial properties nationwide. They have a diversified portfolio. Okay, that's very important. And I just want to go over a few things. This is really crazy. 759 properties, 99.2% lease, 53 industries, 188 brands, 200 tenants. And again, I'm going to go over the FFO because I think that's very important, and the revenue trends. They're in 44 states and 4 Canadian provinces. So that is quite impressive. So I really like that. Look at that. $5.2 billion in real estate investment. So these guys are kind of big and they're cheap. So this is something I had to capitalize on. And looking at their portfolio, they are well diversified. They're in manufacturing. They're in industrial, 54.2%. 17.5% is manufacturing. 14% is distribution and warehouse. 12.5% is food processing. Cold storage, 2.7%. And I did post a video on Americal Realty Trust. So this has some diversification in that, which is cha-ching. It's got restaurant casual dining. That's only 7.3%. Quick service, 6.9%. We're going to go over that. Healthcare is 13.4%. Retail is 11.9%. Office is 6.3%. So again, they have call quarters, corporate headquarters, and strategic operations. A very small portfolio of that. So again, diversification is important because if one sector takes a hit, then, one part of their portfolio takes a hit, you're in pretty decent shape. So let's go over some of these companies that pay rent to them. So looking at the industrial side, okay, so they have a lot of food processing companies, distribution, warehouse, and manufacturing, flex and R&D. It's almost like they're a little bit, flex storage, refrigerated storage, distribution facilities. It's almost like they're a hybrid version of STAG. And you can correct me if I'm wrong in that, but STAG's dividend growth is terrible. Eventually I may buy them, but they're not very impressive. These guys are diversified in some industrial. Now looking at the restaurant, they have Jack's Family Restaurants, J. Alexander's. With Jack's, 43 properties. J. Alexander's a restaurant, 16. Red Lobster, only 18, so big deal. Outback Steakhouse, 22. Krispy Kreme, 25. And Bob Evans, 20. Their healthcare, they have Blue Pearl, Animal Health Services, Arkansas Surgical Hospital, that's going to be in demand. MedVet Associates, so they have Animal Services, Green Valley Medical Center, Healthcare Services, DaVita, okay, that's a in-demand company. And the other thing is with their retail. Look who they're a major retailer with, and this is 60 properties with Dollar General, 21 with Tractor Supply, 6 with American Signature, 6 with Mountain Equipment, 30 with Family Dollar, 19 with Raven Tire, and then their office, not too bad. They have Eventive, corporate headquarters, Center Management Company with strategic operations, Harris Beach, Verizon, USMM, and Crowley Maritime. So again, they're not too overpowered by the office. So if office goes bad, then they're in bad shape. So here's with their tenants, we need to look, especially with industrial, where they're at. So California has been a big one, and I posted a video on Rexford, or REXR, and check that one out. But they've been heavy in California, but I like them being very heavy in Texas as well. So it brought my confidence to buying them as a real estate investment trust, and they're cheap. So I'm going to capitalize on that opportunity. So now we're going to go over some nitty and gritty. So we need to go over funds of operations. That's very important, adjusted funds for operations. So December 31st, 2023, FFO was $69,443. FFO, now this is in thousands, okay? In March 31st, 2024, it was $73,135. For FFO, it's not too bad. It went a little bit down, $75,275 to $74,072. AFFO went a little bit down, $71,278 to $70,873. But again, the occupancy rate, and you can correct me if I'm wrong, I just went over that, with people paying rent is like 99.2%. So that brought my confidence with them. And again, they have a lot of properties. I'm going to go over a few more things. And again, to go over rent collection in these quarters, they've been in the 90s, high 90s. So at the first quarter of 2023, it was 100%. First quarter of 2024, it was 99%. Previous quarter was 99.2%. So they're in the high 99s. That's what I like, even with the offices. So that's quite impressive. Now let's jump to the revenue trends and dividend history. So revenue-wise, this is annually in millions US dollars. 2018, 237, 2019, 298, 2020, 321, 2021, 382, 2022, 407, 2023, 442. So that is a huge increase in revenue. This is annually in millions US dollars. Again, annually in millions US dollars. 2018, 237, 2023, 442. That is a huge increase in revenue. Absolutely, I put my finger on the trigger and bought them. I said I was going to buy them. It was the right time to do it. Now, let's check out the dividend history. So September of 2020, BNL was on the map. They just started on the NYSE. It appears they began in 2020. So since they started in September, they're a new kid on the block. And again, you can correct me if I'm wrong. I'm reading very good sources of this. The quarterly dividend started in 2021. So it was 25 cents to 26 cents. 2022 was 27 cents. 2023, it was 28 cents. 2024, it was 29 cents. So who cares about payout ratio? Remember, FFO is very important. Their number of dividend increases in the last 5 years is 8, and their dividend growth in 5 years is 10.9%. They kind of remind me of Realty Income, Agree Realty Corporation, and NNN REIT. And I like those more powerful REITs because bigger is better. The more tenants, usually the stronger the REIT. Now, that I do think that's the one thing that's keeping MPW in line is they're a big company. They're a big REIT. I think they have 400 plus, with them. These guys have 700 plus, okay? Their yield is high right now. That's something that's a little bit attractive for me. Their revenue's gone up and they're cheap. And if you bought one share, you made $1.14. Now remember, with REITs, you have to report that as an actual income. So it may hit you on taxes a little bit. But this is something that I went in and I am very happy with my investment. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow, and I apologize. It was a processing error. There's nothing I can do. You guys take care and have a good one. Have a great Sunday, and I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It is strictly for entertainment purposes only. Yes, I do own shares of BNL and some stocks that I own in these videos, and things may change. I cannot confirm that I'm long in them. It is best to seek financial advice from a financial advisor or a tax advisor if you're looking for tax advice. So if you're seeking financial advice, go see a financial advisor. Again, my channel is strictly for entertainment purposes only. When you invest, there's a risk. So be aware that you can gain money or lose money, so make sure you do your due diligence. This is my passive income journey. I'm very transparent. And again, you don't have to buy things because I buy them. I just do this for entertainment purposes only and show you my journey as a active and very avid dividend investor. You guys take care and have a good one.